Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, September the 4th, 2012. We're going to be looking at one in particular chart today, the Russell 2000 Small Cap Index. This one we talked about last week, told you that she was consolidating. Let me get out the tools here so I can break it all down for you guys. We had a nice move up here to the resistance point, pulled back from that point, basically formed ourselves a little cup situation right here. Tested that point again, pulled back away from it, and then just consolidated, basically forming that cup with handle scenario there. I told you that you could draw a line off of this high point here and this high close here. Simply draw your line out there, and when you close above that point, 821 area, and when you get above that, then you would be getting your buy signal, and that's exactly what you have as a buy signal form today. So I would actually be a buyer there. You also have a benefit here that you had a hammer candlestick formation the day before, a higher series of low points this way, looking at just the candlesticks, and then a higher series of high points as well. So all that is confirming as well the buy point. There's a couple different things you need to know about this chart. As I mentioned when I first actually drew it out for you on last week, told you in this scenario you can, with this chart pattern, you can draw a line or measure the distance here between the lowest point on the cup formation here and the breakout point. And that distance here, you take that distance, do the math, and you add it to the breakout point. It gives you an idea of how high she can go before you find your next resistance. Remember, that's only a target, but it gives you some idea. Now, there's one other thing that you need to know. Whenever you're looking at the situation, which is known as a breakout chart formation, you would like to see a good volume on that, and you would also like to, I would like to point out the ultimate oscillator here. Oftentimes you'll be in a situation here where you're like at 62.15, you just come real close to the 70 line. People get skittish and they're like, no, I'm not going to buy here because you're just right there. You're going to be overbought and then you're not going to go anywhere. And that's not the case. When you have a breakout scenario, especially if you have a nice consolidation formation before, we do have one here. It's not really long, not very strong, but we do have one. What can happen here is you get a breakout here and then she will move up there into the overbought condition and she will remain that way. So there's different ways to look at the ultimate oscillator. In that scenario, when you're getting a breakout situation, you can hold or hug the overbought condition for an extended period of time. You'll find the same thing with all your oscillators, like the slow Stotch. You can also find the same thing on a downward move. You get a really big move to the downside, real bearish move, then you'll get oversold and they'll hug it. So this is one of the situations where I expect you will find an overbought condition, or at least a signal of overbought, but continue to let it run to the upside and stay with it. Just advance your stop, and until you get stopped out by price, I would, for this moment, just be ignoring the ultimate oscillators above the 70 line in that scenario. And that's just kind of one of those details about technical analysis. You have to know when to use it and when not to. And the basic way I can explain it to you is just when you're in a breakout scenario like you are here, then you want to give more weight to the price activity and less weight to the actual ultimate oscillator in this particular case. And let me clean that chart up a little bit there. Okay. Starting off, I would have my stop set 1 cent below this candlestick's low right here. And here's what I want you to know about this market. Right now, we have news coming out. We're going to have the ECB meeting. I think tomorrow is the last day you can actually buy the market ahead of that news that will come out of Europe. So, you know, you've got that news going to be shaking the markets a bit. And then we also have the unemployment data coming out at the end of the week as well here in the U.S. Right now we're in a market scenario where bad news is good news and good news is good news. So the way that works is if we get good news and the market's like, hey, we're actually, you know, improving, our economy is improving, we go up. If we get bad news, then people say, oh, wait a minute, we got a reason more reason to see the Fed intervene here and get QE3. So that's what's driving the market right now. So I wouldn't be betting hard on the downside in this market. You guys know that today we saw some selling in the market averages, but by the end of the day, that we were bouncing off those lows and coming back in. We were seeing that bulls were strong down there. That's where they're buying. It's not because you have a lot of downside potential. It's because you're finding a bottom, and that's where you're bouncing off of. The only way that changes is if you get some kind of major news out of Europe over the next couple of days that will break this trend. Otherwise, you can clearly see the chart is moving higher. If you've not been to our free website at PerfectStockAlert.com, it is right there. It's 100% free, and all we ask in return, please refer a friend. The easiest way for you guys to do that, please share our videos online. I'm trying to break all kinds of new records, taking people to the new website there at PerfectStockAlert.com, which we updated, I think it was Thursday or Friday of last week. So you guys can check that out as well. And that's it. That's what I got to say. Stop talking. No, I'll stop talking. You stop listening. How about that? Yeah, that's better. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.